Welcome to the Ironworth Trading Show. It's your host, Said Price Stand. It's Sunday, October 26th, 1:27 a.m. We getting ready for the rest of the month of October, right? We in like that last quarter of the year. And we just want to make sure, I want to make sure all my beginner traders know how to get in the trade, know how to read a stock chart. I want you to know about options. What is options? What is options trading? Or how can I benefit from the stock market? That's what I want to make sure how you guys read a stock chart is important. How you do your technical analysis is important. We're going to talk about it tonight. What up, Trev? All right. So today's topic, right? The topic for tonight's show, what I'm going to be going over for the most part is going to be how to use a screener. How many of you guys in the chat know about screeners and how to use them and what they are for? All right, let me know. Put a W in the chat if you want to learn how to use a stock screener or what is it for, and learn about screeners tonight, because this is going to minimize your need of signals and call outs, right? You don't have to rely on somebody to tell you what stock is the one that you should be trading or what sector should you be trading. You use a screener to get to that conclusion. That's what a screener is for. Okay, so we're going to go over that tonight. I want y'all to pay attention because I'm going to show you something that completely changes how you trade. And most people overlook this, right? So again, it's screeners. And I know some of y'all might have seen the word before on your app, or maybe even clicked it once, but didn't know what it really did or why it matters. And that's why I chose to go over it tonight. I should have went live in the daytime, but y'all know how I feel about my night shifters, my graveyard shift. You know what I'm saying? My night owls. I got to make sure, we rock together. So, yeah. All right. So what is a screener? A screener is basically your personal stock detective. All right. So it's going to go through thousands of stocks. A screener will go through thousands of stocks, scan them for specific details you tell it to go look for. So you don't want to control what type of stocks you're looking for. Somebody says, I had a lot of late night jobs. I know that's right, Uber guy, but we don't know no. But yeah, so look. This going to help you look for stocks. The good ones, though, it's going to show you only the ones that match your set of rules. So instead of wasting hours scrolling, looking for stocks or trying to guess, right? Or you chasing random stocks and shit that you saw on social media, the screener is going to find the exact type of setup that you want. You know what I'm saying? So when you on Webull, Robinhood, or any of these trading platforms, you want to learn how to utilize a screener. How many of y'all never used a screener before, but you've been trading for a minute, right? If you've been trading and you don't use a screener, and we talking about stock options, right? You want to use this screener to find good trading opportunities, good buying opportunities, good selling opportunities. That's what a screener is for. It is very powerful. This is like, it's like telling your GPS where you want to go, and they give you the fastest route there, right? So screeners are powerful. I want you to think about it. There's over 5,000 publicly traded companies in the United States. That's just in the United States. It's more stocks than that. But what up, Adrian? There's more stocks than that. But these are the ones that I love when my people come in here. What up? What up? Everybody, if you new here, hit the follow button. And all my returning followers, what's happening? What y'all been up to? So, yeah, just think about it. So many stocks that you can't possibly watch them all every day. But your screener, the screener that you set up, it can. So you can tell it, I only want stocks trading more than 10 million shares a day. You can say, or only show me companies that pay high dividends. Or you can say, find me charts that are showing a double bottom pattern forming right now. Literally, like you can be very, very detailed and very specific, right? You can set up a screener with specificity to make sure that you get to the exact stock that you're looking to get to. All right. So I'm going to show you a few different ways to use a screener and what it is for, right? This platform that I'm showing you off of is called Webull. But yeah, it's going to filter everything down to only opportunities that match the exact setup that you're trying to trade. This is what professional traders do to find consistent plays, y'all. They don't guess. They screen and then they trade. Someone asked me last week, how do you find these stocks that you be finding? How do you know when a stock is about to do something? Cedric, what do you have a crystal ball? How do you know what is about to do something? How, like, why? What the fuck do people know that I don't know? It's the screener. Buy and hold, Mr. Cortez. Buy and hold. You know the game. You know the game and how it goes. I came to get shows. Looking at it. Now, for real though, y'all, the screener is gonna help you. It's gonna help you. So part one, right? We're gonna talk about market filters. We're going to start at the top. The first thing you will see when you open a screener is the section that says market. And this is for Webull. That's going to tell your screener where to look, right? It's going to tell you where I want to be looking at. This is what section, what sector I want to be looking at. The region is going to tell you, right? The region, when you choose region, you telling it what country stock market you want to look at. So if you're in Canada, you can look at Canadian stocks. You can look at Australian stocks. You can look at Japanese stocks. If you're an American trader, you start with the U.S. If you ever want to look at foreign stocks like China, Japan, or Europe, you switch the region. Someone says by screening, you mean creating thresholds based on patterns of previous success, sort of like that, but that's more not necessarily patterns of previous success. Mr. Who is this? Matho Wonders? No, not necessarily previous success, but this is going to create thresholds based on chart patterns or based on technical indicators or based on other things. OK, so this matters because every region has different market hours. For those who if you're looking at the market region, you're looking at what region. Everyone got different market hours, different rules, and different volatility levels. So we always start with our hometown, with the crib, right? Unless you got a reason to trade international markets. But then next up, right, we got exchange. So this is where the stock is actually listed. OK, this is kind of like what neighborhood it lives in. So these are the main ones whenever you get into the stock exchange. We got the NYSE. That's the New York Stock Exchange. This is where you will find the big dogs like Coca-Cola, Walmart, JP Morgan. You know what I'm saying? These are stable, but they're slower movers. You got the NASDAQ. Right. That's usually you'll hear people call it QQQ. You got the NASDAQ. This is where you will find technology and growth stocks. OK, like Apple, Tesla, Nvidia, more volatility, more movement. Then you got Amex, which is smaller companies, ETFs, and more speculative plays like the E-mini, like the Russell. Right. Russell 2000, small cap companies. Y'all need to know this shit because it's going to help you trade. It's going to help you understand. And also, there isn't a school online for this shit. So I make sure that I come on here and give this information out because this is not just it's not just talked about on a daily basis around. You know, people love to trade, but they don't got the information, the necessary intellect to even do it because they just going off what somebody then told them. Well, don't go off what I tell you. Go do your research. I want you to look this shit up so you can see for yourself. That way it'll register once you look it up for yourself. All right. So now the next thing you can filter it by is sector. Right. This one is major. That sector one is major. Every stock belongs to a sector, which is basically its industry's category. All right. So, for example, technology, they got Apple, Microsoft, Nvidia. The energy sector got ExxonMobil, Chevron, right? Gas stations. And then we got the healthcare sector. We got Pfizer, Johnson & Johnson. We got finance sector. We got Bank of America, JP Morgan. And then consumer goods. We got Nike, McDonald's. I hope this shit is registering with y'all because this going to help you you want to be a trader? Pay attention. If you already a trader and you're not using a screener, you trading with one eye closed. Right. So why filter? Why would I want to filter this shit by sectors? Because sometimes one sector is hot while the others are not. Say, we get it, coach. Hey, y'all tap the screen. OK, I just started the live. I want to push it out to a larger audience. Let's get some more people in here. Right. I want to make sure I can help as many people as possible tonight. I know it is a Saturday night. Right. It's early Sunday morning. What's happening, Dreek? What's happening, Dreek? Thank you. I appreciate you for sliding through. Love beyond desire. What's happening? What's up, y'all? Tonight I'm talking about screeners and how to use them and what they are for. When you trading in the stock market and you want to look for what stock to trade, you use a screener to help you find a good trade, a good stock, right? A good options. You got option screeners, ETF screeners, stock screeners. I'm helping you tonight become familiar with a screener and how to use it and what it's for. All right. So remember, sometimes one sector is hot, the other ones might not be. So you see oil prices running up, the energy sector will heat up, and screening just for energy stocks help you ride that momentum. Same with AI news or technology stocks start moving fast. You want to make sure you use the screener to help you find what to trade. This is called sector rotation. When big money moves from one industry to another, you can use your screener to follow the fucking money. All right. So part 2, quote indicators. Now we're going to talk about quote indicators. I'm going to move down slowly but surely, but I ain't going to skip shit. I want y'all to understand what everything is. So when you use a screener, you know how to use it. So we're going to move to what I call the heartbeat of the market. The quote indicators. These tell you what the fuck is happening with the stock right now. Right? This section can help you day traders and scalpers and momentum players the most. This is what you want to use when you're using a screener. You want to pay attention to the quote indicators. So the first one we're going to talk about is market cap. Who want to know what market cap means? Put a W in the chat if you always hear people talking about market cap, but you don't know what the fuck it means. If you already know what it means, thank you. I appreciate you for sitting through this part. I got a special technical analysis on SPY at the end of this cram course that I'm doing for my new traders, but I got you if you stick through. Also, do me a favor and tap the screen, y'all. Tap the screen while I'm yapping. I need y'all tapping. Push the live out to a larger audience, right? As each one teach one here at Ironworth Trading, where iron sharpens iron. We want to make sure everybody good. We want to make sure everybody good. So share the live out and take a moment and share the live out, y'all. And if you're new here, hit the follow button. Thank you. So put a W in the chat if you want to learn about market cap. I need some engagement. We're gonna engage with each other. I need to make sure the class is in session. Y'all paying attention and you're not on your phone, or I gotta kick you out the class. Send your ass to in-school suspension. All right. So market cap stands for market capitalization, which is basically the company's size. Now you know. Now you know what market cap is. That's the company's size. It's how much it's worth overall. It's calculated by multiplying the share price by the number of shares available. Leo Goddess said, I want to learn. Newbie here. Well, you gonna learn today. You gonna learn today. So now I just told y'all what market cap mean. How many of y'all can repeat what I said? Y'all see how the brain work? I'm gonna say it again for y'all though, so we can let it register this time. Market cap stands for market capitalization. Cap is short for capitalization, not what your cap and add. Market cap stands for market capitalization, which is basically the company's size and how much it's worth overall. It's calculated by multiplying the share price by the number of shares available. Okay, so for example, Apple's market cap is in the trillions. A smaller biotech startup company might be only worth 200 million. There are 3 main categories when it comes to market cap. You got small cap, which is stocks that's less than 2 billion. These are riskier, but they can move fast. 10%, 20%, hell, even 100% on a swing trade. You can make a lot of money. Mid cap, anywhere from 2 to 10 billion. They balanced, right? Steady, but still got some growth potential, meaning that you can grow with this company. They still about to blow type shit. Large cap companies over 10 billion, blue chips is what they call them. This is safer but slower moves. You got some stocks that's in the trillions. $1 trillion. Nvidia hit $1 trillion market. $1 trillion, multiple trillion, not just one. Now we're gonna go over to the next one right next to market cap, and it says last price. When you're using a screener, you can filter your stocks based on the last price. This one's simple. It's just the stock's current price. Why does that matter? Because it lets you set a price range that fits your budget or your strategy. If you trade in a small account, you might say, shit, I only want stocks between $2 and $20. Y'all hear me though? For all y'all that be complaining about not having enough money, I'm trying to show you how I'm trying to show you how you can still partake in the festivities. The money making activities. Right? So you might say, hell, I only got 500 in this motherfucker. I want to trade stocks trading between $2 and $20. If you want quality mid-tier stocks, you might say, shit, I want stocks that's trading between $20 and $100. You can also use this filter to find penny stocks. A lot of y'all ask me, how do I find my penny stocks? I use a filter. You can filter out penny stocks. Those are stocks that's under $1. If you want to avoid high risk moves, be careful. All right. So now the next one, percentage change. This shows you how much the stock price has moved today in percentage form. For example, if it says up 5%, that means the price went up 5% today. It's simple. If it says negative 3%, it dropped 3%. Don't be acting crazy when you see these numbers and shit, right? You're not in math class again. You in money class. We making money. So this filter is gold for momentum traders. Y'all know, y'all like them scalpers and shit. That's good for you. You can say, show me all the US stocks up more than 5% today. And your screener gonna find everything that's running right the fuck now, right? Perfect for finding shit that's running right now. Right. And then you got the percentage because y'all be stuck. Y'all be married to certain stocks and you don't even get a chance to move on the shit that's moving because you stuck on what you've been trading, which is fine. Because once you trade a stock a certain amount of times, you become familiar with the patterns. But you can use a screener instead of asking people for call outs or asking people for signals or joining these communities trying to pay them to tell you what to buy. You learn how to use a stock screener and you will no longer have to rely on someone else. See, a lot of these people are going to be mad at me for teaching y'all this, right? A lot of them going to be mad at me for teaching y'all this because you will no longer need them, right? You'll no longer need them. You can use them for whatever you use them for, but you will no longer need them. You will be able to find positions on your own, find winning trades on your own. So is it better to buy options or stocks? It is. I'm going to be honest with you, Leo Goddess. It is lucrative to buy options. It is better to buy stocks. After you make the money off the options, it is smart to buy stocks. And everything in my live stream tonight, ladies and gentlemen, is for educational purposes only. This is not financial advice, but it is common fucking sense in the show. Like I'm not you, Leo Goddess, but I'm saying that because a lot of people, they make money in the stock market and they don't think to buy the stocks outright. Buying the stock outright, Leo Goddess, is ownership. That's why I want you to be a long-term investor and not a short-term investor. Right? It's cool to make money off the options. Cool. You can turn $100 into 1,000. You can turn 1,000 into 5K and you ain't got to wait till you're 50 or 60 fucking years old to see some returns on your money right now. When you trade in options, it's a beautiful thing because when you buying the stock outright, you got to pay how much it costs for one share to get one share. When you trading options, you have to pay a percentage of that price to get 100 shares. So you get to get 100 shares damn near for the price of one. Damn near. Right. And you get to make money from that stock's price moving within that day. Right. So as if you had 100 shares of it. But it's temporary. It comes with an expiration date. So when you trade in options, you get 100 shares for a certain amount of time and you can make a lot of money or lose a lot of money. Right. And when you buying it outright, there is no expiration date. You just riding it out. I bought that stock and if the price went down, I bought some more if I believe in the company. And when the price go up, I made money. But I can take profit or I can buy more. And if it depends on what the stock is, because they might pay you dividends. They might pay you a check just for having the stock. But all of that is another story. We're going to talk about it another time. Right now, I just want to get you through how to use a stock screener and what it's for. Right. So we went over percentage change. Now we're going to talk about the percentage change during extended hours. That's right there on the left side of volume, right above the listing date. So this one is about pre-market and after hours trading. Sometimes the big moves happen before the market officially opened, y'all, or after it closed. Like earnings or like earning announcements or breaking news. A lot of us day traders don't get the benefit from the things that a lot of us swing traders get the benefit from, because when you are day trading, you are opening that position that same day and closing it that same day. When you swing trading, you get to stay in that trade overnight, over a week, over a month, right, etc. However long you got the expiration date for. But the benefit, the pros of having that swing trade is that you get the benefit from the big moves that happen before the market officially open or after it closes. If you see a stock up 8% in the pre-market, that's your early signal that some shit is going on. So if you like trading the open, you can filter this right here, percent change during extended hours, to catch those early moves before the crowd even see the shit. You don't want to be late to the crowd. You don't want to be late to the ball game. You know what I'm saying? You see some shit moving, then you want to jump in on the trade. You done missed a lot already. Now you damn near buying in at the top or catching the falling knife. Buying in at the catching the knife, buying puts when it's already damn near done going down. So we're going to go to volume next. A lot of y'all already know what volume is, but I'm going to go over it still just to make sure the people who don't do. So this one is critical. Volume is going to tell you how many shares was traded today. Volume equals activity. Right? Y'all tap the screen. I need to see them hearts flowing. Right? For me to give love, I need to see the love. I got to feel the love. And it ain't easy feeling the love through this phone, y'all. You know what I'm saying? We are transmitters and receivers. And I am literally transmitting wealth and abundance to you right now. I want you to receive it. And I want you to transmute and transmit love back to me by hitting that follow button and by tapping the screen. Right? And then we can keep this relationship going. If you DM me and inbox me, we can continue this learning. If you would like that, I got you. And then I got a treat for y'all at the end of the show as well. Now, volume. How many shares were traded today? Volume equals activity, right? So the higher the volume, the more people are trading that stock, which means more liquidity, meaning you're going to be able to get your money, right? Easier for you to get your money. And it's going to mean that it's going to be stronger moves. If you day trading, you don't want a stock that only traded 50,000 shares. I mean, that shit dead. That's what somebody called it. Dead in the water. Up shit creek without a paddle. You know what I'm saying? You don't want to trade some shit that's only got 50,000 shares traded on it that's dead. You want stocks that's trading at least 1 million. And for hot plays, I'm looking for shit over 10 million. Volume helps confirm. Where is that? Volume helps confirm breakouts. Right? We know that with volume, it's going to help you confirm a breakout. If a stock breaks resistance with low volume, it's weak. If it breaks with huge volume, that's real momentum. That's where the green arrows is pointing to show you that when the price breaks resistance with a lot of volume, the bottom arrow, that's what you're using that volume for, to let you know whether it's strong or weak. Any questions before I continue? I feel like TikTok got me shadow banned, y'all. They're not showing the live to a lot of people. And I mean, I don't know. I used to get the likes up. So maybe that's what it is. Y'all get the likes up. I need to get the likes up to 10K. I want to teach as many people as possible. Now, I do like quality over quantity, right? So I'm glad that I got y'all in here paying attention. So I'm going to focus on y'all. But at the same time, I need y'all to tap the screen. I really do. I need y'all tapping while I'm yapping. So what app is this on? TradingView or Webull? This is Webull. This is Webull. But yeah, all my supporters, help me get the live up real quick before I continue. I ain't done, y'all. We got to talk about the turnover rate. We got to talk about a few more things. I just want to get the live stream pushed out to a larger audience. Do me a favor. Give me the 5K likes. Give me the 5K likes. Anybody new here? If you haven't hit the follow button yet, what's wrong? It's like garlic to you. You like a vampire, and that follow button is like garlic to you, huh? Stop acting like that shit kryptonite and you Superman. Hit the follow button. It ain't gonna hurt you. It ain't gonna hurt you. It's actually gonna help you, because I do live streams like this on a regular basis where I come on here and I give this information out free of charge. I take that back. It ain't free. You got to pay, and you have to spend. You have to pay attention, and you have to spend time in the live stream for you to get it. That's right. Ain't nothing in life free. Somebody said, just followed. You right, good teacher. Thank you, Leo. I appreciate you. You've been in here talking, chopping it up, and ain't hit the follow button. That hurts, but I'm glad you finally got it together. Charisma, what's happening? So yeah, now that y'all start liking the live and talking to me, I'll start back talking. But if y'all do me like that and get dry again, I'm gonna get dry on y'all ass too now. Dry on y'all too. I'm just playing. But look, volume gonna help you confirm breakouts. If just pay attention to the low volume or high volume. If it's weak, You know what I'm saying? You ain't got shit to pay attention to. It'll be low volume if it's weak. If it's big volume, it's a real momentum. Now the turnover rate. This measures how quickly shares. This is which stock. It ain't necessarily which stock. This is a matter of. This is how to use a screener. This is how to use a stock screener. This is how to use a screener. Okay, and I'm going over the different filters that you can use when you are using a screener. And a screener is going to help you find a good trade. You don't got to ask nobody, hey, where should I put my money at? What should I do? Like, you don't have to ask nobody that shit if you learn how to use a screener. That's what I made tonight's show about, because somebody asked me, do I have a crystal ball? They trying to figure out how do I know what's about to happen? I'm using a screener, y'all. This is like, it's not a secret. But this is my edge in the market, though. This gives me an edge in the market. It's super helpful. Super helpful. All right. So now turnover rate. This measures how quickly shares are changing hands. Basically, how active the stock's trading, how active the stock is trading relative to its size. It's the turnover rate. A high turnover rate means the stock is being traded aggressively, often signaling big interest or short-term plays about to heat up, right? Some shit finna pop off within the next couple of days. It ain't gonna be nothing major or in the long term, but a turnover rate is what you want to trade for some shit like right now. For example, a turnover rate above 5 or 10% can tell you that traders are heavily involved. You want to be one of them. You want to get in where you fit in, right? Now, listing date. This tells you when the company first went public. Like when it had its IPO. So newly listed companies often see a bunch of wild swings. You're going to see the companies that just hit the stock market, they're going to move like crazy for the first few months as they find as they get their foot in the door, right? So as soon as they get settled in, then we know where support and resistance at and all that good shit. That's when they start to calm down. But in the beginning, they pumping or they dumping. So you can make a lot of money. Somebody said, how do you feel about Coinbase? The stock, I think that they ain't going nowhere as long as crypto is in the field. Coinbase is the Robin Hood of crypto. Coinbase is the Robin Hood of Coinbase is the Webull of crypto. So I enjoy it as a stock. If you asking me, what do I think about the platform? That's a whole nother story. You feel me? But yeah. The turnover rate, that's what that's for. It's going to let you know when traders are heavily involved. Now we're going to move on to the listing date, because I know y'all probably tired of hearing my voice, right? Put an L in the chat if I'm completely wrong about y'all tired of hearing my voice. Man, I bought Beyond and should have got out when it was at $7.60, but stayed, so I'm riding Beyond out. I know that's right. And you know what? If you bought it outright, Leo Goddess, then you don't have an expiration date. And you good. Ain't nothing to worry about. You good. You doing the right thing by holding it. You got to ride it out. You know what I'm saying? Somebody says, I'm soaking up value, bro. I know that's right. I'm gonna stop talking shit. I'm gonna get back with the lesson. I'm gonna get back to the value. Thank you for soaking it up. That's all I ask for charisma. I'm not sure if you already following me, right? But I hope you are. Hit the follow button and also help me get this live up to 5K, y'all. Can y'all do me a favor and tap the screen to help me get to 5K? I know it's annoying. They act like us tapping the screen is powering a small village in Africa or something. I know it's not, but it's helping me out with the algorithm, y'all. It's helping me out with the algorithm. And as much as y'all comment, thank you. I appreciate it, Thomas. Charisma. So as much as y'all commenting too, if you ask questions, it helps me out with engagement. So as I'm teaching and helping y'all out with the information, y'all engaging, helping me out with my channel, right? With my page, it helps me reach a larger audience. So I don't want to keep repeating that, wasting time on that part, asking y'all to help me out. You feel me? But it will help me out. And I had a moderator tell me, he said, you give out too much information. I want you to shut the fuck up until they start tapping the screen. And I don't do that. I get on here and I go live and I talk. And I don't really worry about who's tapping the screen. I don't worry about who's following. And I had to stop doing that because it stunts my growth as a online content creator / wealth generator educator. Leo Goddess, You should inbox me and get at me outside of the live stream, and I will go over that with you. I just wanted to go over the screener tonight because I'm limited on time right now. So I'm gonna go over what I came on here to go over, and I will go over the Greeks with you on a individual level. And I also will go over the Greeks during a live stream. If not, I'll go over it one day. Maybe I'll go over it tomorrow show. I'll do the Greeks tomorrow show because I really have so much ground to cover, and I'm only on, what are we on? We just passed listing date. So I'm gonna go over free float. I'm gonna talk about free float. I got you though, Leo. Please inbox me. I got you. So free float, this is one of my personal favorites. Free float tells you how many shares are available for the public to trade. It excludes insider holdings or locked up shares. So the smaller the float, the more volatile the stock is going to be. Volatile means how much we expect it to move. So why? Because it don't take much buying pressure to move this price, to move the price on these. So this is a simple way to look at it, right? A low float is going to equal a lighter boat. So the waves is going to make this shit move it fast. A high float means it's a big ship and it take a lot more fucking water to move it. A bigger wave to move it. So if you want fast movers, you want to filter for low float stocks under 50 million shares. If you prefer slow movers, you go higher. It's simple. So let's keep the same. We're gonna keep this shit. We're gonna talk about the financial indicators. Let me get some water. We're gonna talk about the financial indicators. We'll talk about the financial indicators. Any questions before I continue? Any questions before I continue? About the topic, though. About the topic. All right, so I'll continue. All right, so now this is going to be your introduction into financial indicators. If you made it this far, I appreciate you. Thank you for being a part of the show. Deaf with Dylan. Okay, none. Thank you for engaging and answering my question. I appreciate it. So now we're going to talk about one of the most powerful and most ignored sections of a stock screener. All right, we're going to talk about the financial indicators. Now, I know some of y'all hear the word financials and your brain instantly goes like, oh, shit, he talking about that accounting shit again. Right? He talking about that Wall Street shit again. But listen, you don't need a finance degree for this. You just need to understand what these numbers actually mean. Yes, stock screeners. Correct. I'm finna pin this comment. Yes. Stock screeners. That's the topic. Because it's important. This is your crystal ball. Remember, y'all say, a coach told me that a stock screener is a crystal ball. It is. You having trouble? Come to your screener and it's going to help you figure it out. But you got to know how to use it. They got them on every platform that you use in the trade. They got a screener on it. Know how to use it. And it'll be your best. It'll be your bestie. It'll be your bestie. All right. So now. Where we at? I just had a brain fart. You don't need you just basically need to know how to use financial indicators. So these numbers going to tell you a simple thing. Like, is the company making money or losing money? Financial indicators show you how strong the company really is, y'all. You feel me? It show you how much it earns, how much debt it got, how efficient it is, how much of the cash flow it actually fucking gonna benefit you. How much does its cash flow actually benefit you? You're gonna know this from using the financial indicators. So when you understand these, you stop gambling and you start analyzing businesses. It hits different. Now, yeah, the ROE, we on the ROE. Okay, I'm driving and listening. That's what's up. What you doing out this late? Nothing open this time of night. I'm just playing. So look, the ROE, return on equity. Let's start with one of the most powerful ratios. Somebody says, when I'm buying, where do I place my take profit and stop loss? When I'm selling, where do I place my take profit and stop loss? I don't want to feel none. That is a question for another live stream or another. You got to inbox me. I got you. I will definitely personally show you that, right? In an individual lesson, because that's a spot where you are at in place and time. That's where you at in space and time. And so I would have to help you right at that level. But everybody not at the same level. So I want to try to teach everybody at the same level for right now. And if y'all want to continue that learning, inbox me outside of this live stream, and I would love to be your mentor. It would be my pleasure. Now, the ROE. Think of this is ROE stands for return on equity. Belizean mommy, thank you for liking the live. I appreciate you for coming in. I thank you for coming in. Black, appreciate you for coming on in too. Y'all pull up a chair and listen, right? If you're new here, hit the follow button. If you've been here, you grew here, and I appreciate you. Thank you. All right, so look, ROE, return on equity. Think of equity like the investor's money. All of the money shareholders have put into the company. The ROE tells you how much profit that company makes from that money. So if a company has an ROE of 10%, it means for every dollar that investors put in, the company earned 10 cents in profit per year. Simple example, if you had $1,000 and you made $100 profit, that's a 10% return. I'm going to say it again. If you had $1,000 and you made $100 profit, that's a 10% return. Same idea, but for the company. A high return on equity or a high ROE means the company is using its investors' money efficiently. A low ROE could mean poor money management and or inefficiency with their use of resources and shit. Like they fucking up. They fucking up the church's money. So a good rule of thumb that you can use with the ROE, if the ROE is above 10%, it equals solid. If a ROE is above 20%, that equals fucking excellent. But if a ROE is under 5%, that's a red flag. So when you're using a screener and when you screening and you using ROE, the return on equity, try to find companies. You use ROE to try to find companies that actually know how to grow your money. Are y'all with me? We're going to go over to the ROA, the return on assets. Next up, return on assets. This measures how well a company uses everything it owns. Its buildings, its equipment, its technology, etc. Like this is how they use everything they own to make profit. Y'all don't know that. Y'all thought that we was just pressing buy and sell on this shit. Y'all ain't know that there's more to trading stock options than what you thought, right? You thought it was just buying a call or a put, huh? Well, this shit gonna change. It's gonna change your winning percentage drastically because you're not just following somebody. Yes, it's red flag. But trading, not knowing all of this extra information is gonna matter, bro. You're gonna perish for a lack of knowledge. If you know what I'm saying. So I don't want you to perish. Like I want you to flourish. Now, if this ROA thing, the return on assets, is gonna answer a few questions for you. You're gonna get to figure out how much profit are they generating from every dollar of stuff that they own. So, for example, if a company has $1 million in assets and make $100,000 in profit, that's a 10% return on assets. A high ROA means that they are efficient and this is a productive ass company. I think I'm cool with investing in them. If it's a low ROA, they got some lazy ass assets and poor efficiency or too much debt, and I ain't putting my money in that shit. Know what you're doing before you do it, y'all. Right? You steady wrong, you steady wrong. So I used to hear my uncle them say when they was shooting craps and shit, you feel me? So yeah, EPS, earnings per share, EPS, earnings per share. This tells you how much profit the company makes for each individual share of stock. If the company made $1 million in profit and there are 1 million shares, the EPS is $1. It's not hard maths. If the company made $1 million in profit and that's 1 million shares, that's an EPS of $1 because the EPS tells you how much profit the company makes for each individual share of stock. The higher the EPS, the more profitable each share is. Somebody said low ROA, bad investment, lazy eye. Hell yeah, charisma. Yeah. So the higher the EPS, the more profitable each share is. EPS is what moves the markets during earnings season. Y'all be hearing about earnings season. You want to look at the EPS around this time. When you hear Tesla beat EPS expectations, that means they made more profits per share than what the analysts thought. Right. And a lot of time them analysts don't be knowing what the fuck they talking about. So don't be caught up too much on what they say either, though. But yeah, you want to use the EPS growth. You want to use the EPS over time to see consistency. You want to look at this to see if they really, if they going to keep doing good. A company with rising EPS year after year, they got a growing business. If it's a falling EPS, it's declining or a struggling business. You want to keep your money in a struggling business, or do you want to put your money in a growing business? You see why this shit matter or not? It'll click. It'll click. I'm going to keep going. It'll click. BVPS. What the fuck is that, Said? Why do we got to care about that shit, man? What the fuck is we using a stock screener for? Well, I'm telling you why. I'm telling you what everything means and what it's for so that you know. I don't want you to be out here just looking at this shit on your apps and not using them. Somebody said you sharing some good stuff. Thankful I came across your page. I love to hear that. Makes my day. I actually do this shit every day to hear that. I got my daily dose every time somebody told me that I served my purpose. I'm fulfilled when I hear that. So thank you. I appreciate you for stopping through. And I also appreciate you for the acknowledgement. And I'm also going to acknowledge that I see that you're a very wise and smart person for seeing that I am. All right. How about that? Now, BVPS, the book value per share. Book value per share. This one tells you what the company would be worth if it sold everything it owned and paid off its debts, all of its debts. How much is this shit worth? It's like the liquidation value per share. All right. So if a company got $10 billion in assets and $8 billion in liabilities, that leaves $2 billion in equity. But to a broke motherfucker, they looking at, they got $10 billion. You don't even know they got $8 billion in liabilities, though. So that leaves them $2 billion in equity. If there are 1 billion shares, the BVPS is $2 per share. Yes. If the stock trades below that number, it might be undervalued. If it trades further above that, and then we know to expect a lot of future growth. So this is big for value investors. That's me. I like looking for hidden gems, y'all. I know a gem when I see one. And when I see a gem, I got to grab it. I got to get it. I don't want nobody else to have it, right? I got to get it. I got to get the gem. You feel me? But the thing about gems is people looking for them. This is what you use a screener for. Now, the net margin. I'm going to try to make it snappy because I know y'all got shit to do. We're going to go to the net margin. Where we at? Yeah, right in the middle under the financial indicator section. We're going to talk about the net margin. If you missed anything that I've spoke about so far, please do me a favor and subscribe to me on YouTube so you can catch the replay because I will repost it on there so you don't miss a beat. All right, you can watch the rest of the show and then go back on there and finish the beginning because you don't want to miss this one. It's going to literally, I'm going over everything in this stock screener, how to use it, and I got more grounds to cover. So let me go ahead and get on with it. All right, we got the net margin. This shows you how much profit the company keeps after paying all of its costs. Everything, materials, salaries, taxes, etc. This is not the same as the BVPS. The BVPS tell you how much what the company gonna be worth if they sold everything it owned and then paid off all its debts. The net margin show you how much profit the company keep after paying all its costs, everything. So if a company has $1 million in revenue and $100,000 in net income, that's a 10% net margin. That means for every $1 in sales, they keep 10%, they keep 10 cents as profit. So what does this mean? A high net margin means that they got efficient operations and strong pricing power. A low net margin means you got high cost or weak profitability. Do you want to put your money in some shit that got weak profitability? No. So that's what a screener is for. You can avoid that. So a benchmark for this would be like retail companies, they got 2 to 5%, tech companies 10 to 30% net margin, and then financial companies 15 to 25% net margin. So if you comparing, make sure it's within the same fucking industry. Walmart's 3% margin can still be amazing for retail. It ain't don't hit the same. Somebody said, it's my birthday. I decided not to go out and drink. I want to learn more about investing. See, Charisma? I'm laughing because I'm the same way, right? I'm the same way. Is it Scorpio season yet? Is it Scorpio season yet? My B-Day is in 4 days, right? I'll be 34 years young and on October the 30th. So, I'm not out drinking either. And instead, I'm in here teaching y'all. How about that? That's right. It is. It's Scorpio season. Shout out to all my Scorpios. Happy belated birthday to all my Libras, but your time has come. Capricorns, y'all calm y'all ass down. Y'all on the way. Y'all on the way. But yeah, now, like I was finna say, we got the net margin out the way. Now we're going to talk about the debt to asset ratio. So we're going to talk about one that keep your money safe. This one keep your money safe. The debt to asset ratio. It measures how much of the company's assets are financed through debt versus owned outright. A lot of us as entrepreneurs, and we don't even know about this shit. Like, this shit applies to you and your company and your business too. Your business has a net margin. Your business has book value if you got shares, but your business has debt to asset ratio. Your business has cash flow per share. CFPS. So it's good to know this shit anyways, even if you're not trading stocks. I mean, shit, because your business has these things. But look, debt to asset ratio. If a company's debt to asset ratio is 0.3 or 30%, that's what that is. That means 30% of its assets are borrowed money and 70% is owned. See how much information that is? They really, it's public information. They got to tell you all this shit. A lower ratio gonna mean a safer company. A higher ratio means you got more leverage and a higher risk. So if a utility company might run 0.6, 0.7 because they borrow to build their infrastructure. A technology company should be closer to 0.2 to 0.4 because they don't need massive loans. You want to use this filter to avoid companies that's drowning in fucking debt, especially high interest environments. Keep that in mind. All right. The debt to asset ratio is, you want to be careful. When you investing, don't you want to be fucking careful? Or are you trying to lose money? Or are you gambling? You're not gambling. We're not gamblers. We're not gamblers. All right. We're not happy we can do this shit. We happy we can do it again. That's what we paying attention to. All of these things in the screener so that you know how to have, you can have your own crystal ball. A screener is like a detective. It's going to go out there and find the shit for you. So now CFPS, another underrated filter, another underrated parameter. CFPS stands for cash flow per share. This one's underrated too. All right. It's going to tell you how much actual cash the business brings in per share, not just accounting, not just for accounting profit. So because sometimes a company looks profitable on paper, but they are really broke, you can't fake cash flow. You hear me? You cannot fake cash flow. That's why it's important to look at this shit. If a company got strong CFPS, it means they generating real money from their business operations. They not just fucking faking it on paper like Greenwave Technology. Bitch ass motherfucker. I want to swing on them if I ever see them. Anyways, positive, growing CFPS equals healthy, sustainable companies. Negative CFPS equals burning through cash. Often they just started up or they about to fucking go out of business. You want to be careful with them type of stocks because they'll make you want to find who the hell started and you want to do something to them. This is for educational and entertainment purposes only. TikTok. Don't put me in detention. Get me suspended. But yeah. Now where we at? We are on the CRPS now. The cash revenue per share. This looks similar to CFPS, but it focuses more on how much revenue per share is being generated in cash terms. So it's another way to judge efficiency. How effectively each share is tied to income. The higher the CRPS, the cash revenue per share, the higher this is, the stronger the company's revenue power per share. Right? Now we're going to move on. Yeah, cash revenue per share. That's right. And we're going to move on to dividend and dividend yield. Put a W in the chat if you heard of dividends, you know about dividends, or if you want to learn about dividends. The dividends. I like that word. I'm all about my dividends. All right, Charisma and Leo, I got y'all. Now, my long-term investors, right? Dividends and dividend yield. A dividend is simply a company paying a portion of its profits back to its shareholders. Give me my money. Just give me my money, right? Show me the money in my Jerry Maguire voice. It's the dividend. So if you own 100 shares of a company and that company pay $1 a dividend per share, you earn $100 just for holding the fucking stock. Just for holding the stock. I repeat, I'm going to say that again. I don't think y'all hear me. I'm going to say it again. A dividend is a company paying you a portion of the money that they made back to you just for holding the stock. If you own 100 shares of a company and they pay you $1 a dividend, $1 per dividend per share, a dollar for every share you own, you just made $100 just for owning the stock. So dividend yield is that payment expressed as a percentage of the stock's price. So if the same stock trades at $50 and they pay $1, that's a 2% yield. So when you're looking at stable companies and they giving out consistent dividends like utility companies, telecommunication companies, and consumer staple companies and shit, those are great for dividend or great for income. But be careful with them extremely high yields, like 10% dividend yield. Because sometimes that means that the company's price has crashed so bad and they doing so bad that they just trying to pay you for owning the shit. And the dividend might not be sustainable. It ain't going to last long. But yeah, they will pay you for owning they fucked up ass stock. It could be a trick sometimes, but a lot of rich people use dividends as a way to get some liquid cash right now on some money that they saving that's growing interest and paying them at the same time. Y'all making me turn purple in the face trying to explain this shit. Now the P/E, right? Y'all see where it says. Where we at now? We actually on, let me go to another slide right now. We done made it through the first round. Now, yeah, we went over dividend yield. Now we're going to talk about the PE. I know y'all looking like, God damn, bro, we got all this shit to talk about. Yeah, I mean, shit, this is classes in session. If you sleepy, go to sleep, right? If you sleepy, go to sleep. Y'all ain't got to, gonna be falling asleep in my class now. Don't be falling asleep in my class. All right, but yeah, we talked about the dividend yield. Now we're gonna go over to the P/E TTM. I seen some pro traders do some shit with this TTM. You talking about a crystal ball? That TTM will give you a That's So Raven moment. Who remember That's So Raven? I'm a night shift worker, so I'm on. I know that's right, Leo. See, the early bird gets the worm, but we rarely get sleep. You feel me? But yeah, that P/E, that TTM, that'll give you like a psychic moment, right? So I promise you this is one of the famous ones. Like a lot of people use TTM. TTM stands for trailing 12 month. They're like, nigga, why you yelling? All right, so look, it stands for trailing 12 month. TTM. P/E. Price to earnings ratio. Okay. Now trailing 12 months, that just means the last full year. All right. So P/E compares how much investors are paying for $1 of earnings, for $1 worth of earnings. So if a company's stock is $50 and it earned $5 per share, the PE ratio is 10. I'm going to say it again, y'all, for the people in the back. If a company's stock is $50 and it earned $5 per share, the PE is 10. A low PE ratio, that's under 15 to 20, right? Anywhere between 20 and 50, under 20 to 15, that's possibly undervalued. Undervalued means you don't think this company is worth much, but it's really worth more than what you think is worth. They don't think the company is worth much, but it's really worth more than what they think is worth. So if a company is undervalued, I think that's something I want to be a part of, because that means maybe one day people will see the value in it, right? I don't want to hope, I don't want to guess, but I'm just saying, if it's undervalued, then people are missing out, because I see the value in it. Or maybe it is truly valuable, but people think it's undervalued, so they will miss out. That's what happened with GoPro. The little camera company, I knew GoPro was undervalued at 50 cents. Why the fuck was GoPro at 50 cents? I have no idea what happened to make them even go down that low. But it should not be cheaper for me to be a part owner of a wonderful ass company like GoPro, but then it's more expensive for me to actually be a consumer of it and go and buy one of those GoPros. The same thing with Nike. Nike is undervalued as fuck right now to me. Why is Nike so cheap right now? And it's cheaper to own a part of this company than it is to buy a pair of Air Force Ones from them. I pay attention to shit like that, and I want y'all to too. So now, this is going to help you out, because you're going to find undervalued stocks. If it has a high PE above 30 to 40, this is for heavy growth expectations. So again, you compare within industries, just like with the other ones. The tech companies often have higher PEs because investors expect faster growth. That's what happened with Palantir. A lot of people kept complaining about Palantir having a weird ass PE ratio, but they're not taking it into account that we expect it to have faster growth. It's a fucking tech company. It's actually a unicorn because it's on the defense it's in the defense sector and the tech sector at the same time. One of the few only stocks that's in more than one sector like that. Now, on to the next. Total revenue. I'm gonna try to breeze through this one. Total revenue. These three go hand in hand, and it show you how money flows through a business. Total revenue, all money made from sales. Operating income, what's left after paying for operations like employees and rent and shit. And then you got net income, the final profit after everything, including taxes and interest. Again, if you have a business, you got a total revenue, a operating income, a net income. You got the same shit within your business. You just not a publicly traded stock. So you ain't paying attention to this shit, but you should be. But you want to think of it like this. Revenue is your paycheck. Operating income is what's left after your bills, and the net income is what's left after taxes. You want to see growth in all three over time. That's a sign that you got a healthy company. That's a sign that you're investing in a healthy company. This is not financial advice. This is educational purposes only, with a little bit of entertainment in there too, because y'all got me fucked up. So now we're going to talk about the gross profit, total assets, liabilities, and equity. Gross profit. It's the sales minus the cost of goods. It shows you how much they make after paying for materials or services. High gross profit equals strong pricing power. So you got your total assets, everything the company owns, the cash, the buildings, equipment, inventory. You got liabilities, everything they owe, loans, bills, debt. And then you got equity, what's left after subtracting the liabilities from the assets. Tonight, I want y'all to, whatever y'all at, when you go home, if you're already home, tomorrow, whatever, you need to do it tonight though. Write down, find out what your gross profit is in your life, in your household. Find out compare how much money you got coming in. I want you to look at your total assets, everything you own, cash, buildings, houses, right? Equipment, inventory, whatever. An asset is anything that's making you money. A liability is anything that's taking money out of your pocket. I want you to write down all your assets, write down all your liabilities, and then figure out what your total equity is. That's how much you have left after subtracting the liabilities from the assets, because that's basically the true net worth that you got right there. But you're going to take that, and that's how much you got to invest. Because a lot of people like, I don't got enough to invest. I just got to pay my bills. I only got enough to pay my right? If equity is rising year after year, it's a great sign. It means that you're growing value. And if a company's equity is rising year after year, it's a great sign. It means that they're growing value for you as a shareholder. If you can make sure that you can minimize your fucking liabilities and your expenses and grow more assets, build more assets, pour more into your assets, the assets will then pay you in return. Pay yourself first. Go read Rich Dad, Poor Dad, y'all. It's a great book. It'll help you understand that basic concept. Now we're going to move forward to the cash flow from operating, investing, and financing. The cash flow from operating, investing, and financing. We already went over the operating income. We went over gross profit. We went over cost of revenue. Did we? Did we go over cost of revenue? Yeah, we did. We're going to go over cash flow from operating. It's the bottom roll at the top, y'all. Cash flow from operating, cash flow from investing, and cash flow from financing, right? It's deep. It's a little nerdy, but it's all right. I'm going to make it simple. So companies get and spend cash in three main ways. The operating activities, that's the core business. Companies make and fucking sell products. Y'all know that. I'm sorry for cursing. I need to stop cursing so much. I just like using curse words. I don't know why. This should be positive, right? The operating activity should be positive. That's how you know the company is being ran well. And then you got investing activities, buying or selling properties, machines, or other businesses. It's usually negative because they invest in growth. That's not really a bad thing when you see they end that is negative. It's not really a bad thing. That just means they investing. Then you got financing activities. They borrowing money, issuing shares, paying dividends, and show you how the company funds itself. Right? So you want to see positive operating cash flow because that means that the business itself is profitable. Negative operating cash flow is a red flag because they burning I was finna curse again. They burning their motherfucking money to stay alive. Now we on to the technical indicators. We gonna talk about the technical indicators and why that shit matter because we done already went over the rest of the screener. So my water real quick. In the box, and now it's time to say goodbye. Looking at her. All right. Technical indicators. We didn't cover the fundamentals. You know what I'm saying? If you missed the fundamentals, go ahead and subscribe to me on YouTube and you can catch the replay. We went over where to look, what kind of companies to trust. Now it's time for us to talk about the fun shit, technical indicators. This is where we move from understanding the business to actually timing the trade. I'm sorry I had to get through all that nerd shit for y'all, but it really ain't nerd shit. It's entrepreneur shit. It's investing shit. We got to know. We got to know. We got to know. Right? We got to know. So now I want to let y'all know that this part, the financials tell you what to buy. The technical indicators tell you when to buy and when to sell. Let's go ahead. It says remove background noise so your followers can hear you more clearly. Okay, let's see if that sounds better. Let's see if that sounds better. All right, any questions before I move on to the technical indicator side of this show tonight? Do me a favor, y'all. If you're new here, hit the follow button. If you are new here, hit that follow button for me. You don't want to miss another live stream. This information I'm teaching y'all, people charging $5,000 for it. I had somebody come in my live the other night and tell me they paid somebody $5,000 to learn, and they learned more in my live stream than they did with that person. And to me, that's just fucking absurd. It's absurd. So yeah, we're gonna make sure I come out here as much as possible and teach y'all this shit. Because it shouldn't be charged for. This shouldn't be charged for. My time is not for sale though. My services are. But my time is not for sale. I value my time. My time is too valuable. I figured I'd come on here and share some time with y'all though. So please value it. So now we're gonna talk about the what we got here, TikTok. Oh, I thought I had one of them. You know, TikTok will pop some shit up on you in a heartbeat like you did or said something wrong. But it was one of them finish this puzzles. Technical indicators matter. We done went over the fun shit. Now you want to know when to buy and when to sell. It's going to help you read price action, momentum, and trends. Basically, this going to be your weather forecast for the market. All right, so now we're going to start with the first one. It says MA. This is the moving average. This smooths out price over time so you can see the trend clearly without all the daily noise. You could think of it like a rolling average. It adds up the last certain amount of days prices, and then it divides it by how many days it is. So let me give you an example. A 50-day moving average averages the last 50 closing prices. If the price is above the moving average, then the trend is bullish. If the price is below the moving average, then it's bearish. Bullish means the price is going up. You think it's going up. Bearish means you think the price is going down. Short-term traders like the 10-day or the 20-day moving average. Swing traders like the 50-day moving average. I'm going to show y'all about moving averages on a chart in a second, so I ain't going to spend too much time on it on the EMA. So we got the moving average, and then you got the EMA, which is the exponential moving average. This one is just a faster version of the regular moving average. It gives more weight to recent prices, so it's going to react quicker to changes. Again, I'm going to show you all about the moving averages on the chart in a second. I'm going to show you about the relative strength index, which is the RSI, right? This measures momentum, how strong or weak a stock's price movement is. I'm going to run through this part because I want to get to the actual how to read a stock chart part of the show. Now, RSI, it runs from 0 to 100. So over 70 means that the stock is overbought. Too many buyers could pull this shit back too, right? Too many buyers is on there right now if it's overbought, and it could pull back if the RSI is over 70. If the RSI is under 30, it's oversold. It's way too many sellers involved right now, and the price could actually bounce back up. This type of information can make you a lot of fucking money if you paying attention right now. Like, you're going to make money because you're going to be able to use the power of execution and actually take advantage of what you learned in the live stream tonight. So if a stock been falling for days and the RSI hit 25, that's a potential reversal zone. It's time for me to buy. It's time for me to buy a call. If it's been running hot and the RSI is fucking up to 85, don't try to jump in. That's not the time to jump in. You really want to wait for it to cool off because it could be coming back down from there. It's too many buyers when the RSI is over 70. Remember, it's overbought. When it's under 30, it's oversold. Now we're going to talk about Bollinger Bands. That's the bold technical indicator right there. Say BOLL technical. That's the Bollinger Band technical indicator. Bollinger Bands measure volatility. They draw 3 lines. The middle line is a moving average. The upper and lower lines expand like a balloon and contract with volatility. When price hugs the upper band, it's stretched out high. When it hits the lower band, it's stretched low. A squeeze can happen when the bands get tight, like a rubber band. So whenever the bands get tight around the price, that means it's low volatility and usually is signaling a big breakout about to happen soon. I'm going to move on to CCI, Commodity Channel Index. The CCI measures how far price is from its average. Value above 100 on this one means that the price is high compared to normal. Below 100 means that it's low. You want to pay attention to how do you want to get in? Do you want to buy this shit when it's high, or do you want to buy this shit when it's low? You want to buy this shit when it's low. You want to see where the price is compared to where it's normally at. Where is it now compared to where it normally is? Oh, well, if it's normally $60, why the fuck would I buy it right now? I want to see if I can get it for the price that it normally is trading at or cheaper than where it's normally trading at and take advantage of the dip, right? Now, traders use this CCI, they use this too to find reversals or overextended moves. You combine CCI with the RSI and the moving average. You combine Commodity Channel Index with the relative strength index or the moving average for a stronger confirmation. Remember I told y'all about confirmation? That's like, damn, I think it's time to press buy, but I don't know. You got so much shit to help you come up with that decision. You should never be saying shit like that. Like, oh man, I think it's time to buy a put. No, you don't have to think. You use a screener or you learn how to read a chart like I'm about to show you in a few minutes. Now we got the stochastic oscillator. The stochastic oscillator, right? Let me see. CCI FSTO. Fast and slow. That's what that is. Fast and slow. This indicator compares a stock's closing price to its recent range. It tells you how close you are to the highs or lows of that range. Above 80, overbought. Below 20, oversold. Fast just means that it reacts quickly. Slow means it smooths out. This is good for spotting short-term turning points. Scalpers, short-term turning points. Now we got the KST technical indicator. KST stands for no sure thing. KNOW, no. No sure thing. This one combines multiple moving averages of rate of change into a single momentum signal. So when KST crosses above its signal line, that's bullish. Price could go up. It's going to go up. When it crosses below, it's bearish. If knowing where the price is going to go up or down is how the fuck a person can easily make money every day in the stock market. Oh, God, I don't know what else. I'm going to go get some water. You want to know when the price is going to go up or down. You want to know when it's about to flip bullish because you know when to get in. You want to know when it's going to flip bearish because you know when you about to get in on a put or when to press sell or when to get the fuck out the call if you in one. It's important to know when the prices is going to go up and down. This is how you're going to be able to make money on a consistent level. Consistency. MACD. Sound like an old school pimp name, but no, it's not. MACD stands for moving averages. This one is a good one to use. It uses two EMAs, usually the 12 and the 26-day EMA to show you when the momentum is shifting. When the MACD line crosses above the signal line, that's a bullish crossover. When it crosses below, that's a bearish crossover. Again, it's telling you when the price is about to go up or when the price is about to go down. It's actually a lagging indicator, so it's showing you that it's just happened, right? It literally just happened, so it really ain't gonna lie to you, because it's showing you what has already happened. It's a lagging indicator. Momentum. This one is straightforward. It measures the rate of price change. If momentum is positive, the price is moving or accelerating upward. If it's negative, the momentum is slowing down. It's not hard to understand momentum. Think of a hill. And you roll the ball up the hill. The ball represents the price. The price goes up the hill. How many times have y'all rolled a ball up the hill, but you didn't have enough volume under it? So what does it do? But it didn't make it to the top of the hill. It reached a certain point, but you rolled it. Boom, it got out. It left your hand fast. It went up that hill fast, but at a certain point, it slows down. Y'all seen the ball go up a hill and slow down at a certain point before it did what? Come back down. That's right, love beyond the right. Before it come back, that's helping you understand momentum and volume right there. If you can just visualize that, okay? Now, Williams, let me see where we got. I think I'm moving ahead of myself. Yeah, there we go. Williams R percentage. Bottom right on the top, bottom right. Williams R technical. This is another overbought / oversold tool that you can use to find a stock that is overbought or oversold, right? When a out of shape person run up some stairs, right? Don't they get tired at the top? They get exhausted. So this is good for you to help you find stocks that are exhausted from going up and about to flip and go the other way. Classic patterns, right? We move into the classic pattern section. This is the visual language of charts. So these are shapes that the price makes that tells you what the traders are feeling, whether it's fear, greed, indecision, or if it's about to break out. So we got triangles. We got ascending, descending triangles, symmetrical triangles. These are chart patterns. Let me show you what I'm talking about real quick. So we got flat tops, rising bottoms. You know what I'm saying? We got so many different classic patterns, chart patterns, candlestick patterns that you should go and study and learn and memorize and burn them into your fucking brain. Because when you see them, they're going to help you make money. All right. Diamond patterns, double tops, double bottoms, triple, like so many different patterns, right? And it can become a bit overwhelming, right? I remember my first year trading, I bought posters with this shit. I put it on my screensaver. I mean, I just burned it into my brain. So now when I see a pattern, I can see it from a mile away. I see the pattern forming and I already know what the fuck I'm finna do when it get to a certain level, because I know where it's about to get to, because historically speaking, it has gotten to that level every time, damn it, right? Megaphone patterns, candlestick patterns. These tell you the story of price in one glance. Who's winning the battle between the buyers and the sellers? You got engulfed. Let me see. Somebody says, how's AMD blowing up? I'm not sure right now. If you follow me, because I'm sure you haven't, if you follow me, I'll give you a technical analysis on AMD at the end of the show. But you got to follow me, though. You feel me? Y'all don't come in here asking me shit and you ain't hit that follow button yet, right? That's crazy. Again, this is like Harvard over here. I don't want everybody. Everybody not getting accepted. You don't get it. I don't care about everybody. I'm just being real. Because everybody can't get in here. I do not take bullshitters. Not saying you a bullshitter, my guy. I'm just saying you got to hit that follow button if you want me to give you that analysis on AMD, because you just come through here, what they call that shit? I don't know what they call it, but don't just come in here thinking you about to get that and you ain't hit the follow button. You feel me? You see how my people liking the live and supporting? That's who I'm doing it for. I'm doing it for my supporters. The rest of y'all, get y'all ass out of here. I don't care if y'all in here. Take your ass on. You're not here to stay. If you're not here for a long time, hit the follow button. That's who I'm fucking with. That's who I'm here to support. Everybody else, I don't really care about what y'all got going on, because y'all just coming through here for a little bit. Y'all ain't gonna never see y'all or hear from y'all again. I got a little sidetrack. Anyways, engulfing line, the bullish engulfing, green candle fully covers the red one. When a green candle fully covers the red one, right? But if a green candle fully covers the red one that came before it, the buyer's taking control. A bearish engulfing candle means the red candle covers the previous green candle and the seller's going to take control. That little piece of information that I just taught you can make you a shit ton of money. That's why I was just talking shit 30 seconds ago. Because I'm here to help y'all. I'm here to show you a way to make your money, make money for you without this being financial advice. I'm teaching you how to do this shit, because it's fundamentals. It's psychological. It ain't got shit to do with none of that other shit. It's you versus you in a trade. You got all these different candlestick patterns, exhaustion bars, gravestone dojis, hammer, hanging man. We can go over each one another day, because right now I want to try to work my way to putting it all together. Like, how do you use the screener? So this is how you bring everything home. Screeners are only as smart as the filters that you set to use the shit. So you want to combine what you learn. Hold on, let me show you. All these different damn things that you can find. You can use all of these screeners. You can find stocks based on the damn candlestick pattern. It don't get no more easier than that when it comes to how do I know what to trade. Like, you don't have to be confused, y'all. I'm actually about to show you how to read a stock chart in a second. I am. I just wanted to go over this, because this is how you do it. Screeners are only smart as the filters you set. So combine what you learn. Example one, if you're a momentum trader, let's say you went and okay, you want to trade stocks in the United States with over 5 million volume, and they got a 5% change to the upside. They up 5%. The RSO below 70. We looking at a flag, a bullish flag pattern. Now it's going to give you 30 stocks that fit that description. If I'm a swing trader, I'm going to make sure that the PE ratio, I'm going to hit the filter for the PE ratio and see if I can find ones that's, less than 25. And I want to look for the ROE and find ones that's greater than 10%. I want to look for volume that's over 2 million. I'm looking for a chart pattern, any stock that got a double bottom on it that's for the short term bullish. Right? I want to look for stocks that got a double bottom that's about to go up in the short term. You will catch quality companies bouncing off support zones by using that filter. If you like dividends, You want to look for a dividend yield that's greater than 4%. I want to look for a company whose debt to asset ratio is less than 0.5. And then I want to make sure that the company has a ROE that is greater than 15%. Boom, you just found a stable income producing stock by using a screener. The goal is to mix fundamentals plus technicals. The fundamentals tell you the stock is worth owning. The technicals tell you the timing to get in or out. So once you learn how to use a screener, you stop fucking guessing and you start targeting things. You become a data-driven trader, right? Someone who trades with purpose and not fucking emotion. Tonight, you learned how to look, how to filter, and how to confirm. That's now all you got to do is practice. Build your own screener. Save it. Tweak it. Watch how your consistency improves. Come back, say thank you, coach, when it happened. That's how traders go from hoping to knowing. Right? So if you want the full masterclass, not just a summary, no cutting corners, none of that bullshit, come to me outside of the live stream and I could be your mentor. We can get you together on all this shit. I also have a community that you can join. Hit the link in the bio. Hit the link tree in the bio. But now we're going to move on to my favorite part, which is I'm going to show y'all how to read a stock chart. Put a W in the chat tonight. Put a W in the chat right now if you interested in learning how to read a stock chart, a candlestick chart to be exact. Oh, Leo, you here. Leo, you locked in, Leo. Thank you. Belizean Mommy, thank you so much. I appreciate you for the likes. You done got me up to 12K likes. I see you. I see you. I see you. And ladies, all you beginner traders, that's ladies, go follow Baby Trading Baddies, right? It's a good community for new traders. If you a baddie and you a new trader, she got something going on called Baby Trading Baddies. Go look that shit up. It's pretty dope. But now we're gonna talk about the S&P 500. That's the name of this chart that you're looking at. I'm gonna teach you how to read this from the top to the bottom, line by line, candle by candle, number by number. You ain't gonna be confused no more when you look at the charts. You will not be confused. All right, so look, this is the SPY. That is the ticker for this one, SPY. That's an ETF, which is basically an exchange traded fund, and an ETF is a basket of stocks, ladies and gentlemen. So this is SPY. That's an ETF, a basket of stocks that tracks the best performing companies in the United States. So SPY tracks the S&P 500. So this is basically the heartbeat of the United States stock market. So if you understand SPY right now, if you understand this, you're going to understand how to read any chart. Yeah, expensive, but you're not buying it outright, Leo Goddess. I can't wait to teach you how to trade stock options. Please inbox me because you're going to love it. You're going to absolutely love options because you will not pay $677 to make money on this. You can pay $67. I'm going to show you how to do it. Inbox me. I got you. Right. I'm going to show you. Y'all, this is the place to be because tonight we finna go over what you're looking at. Whether you brand new or already trading, today I'm going to give you the language of the market. By the end, you're going to know exactly how to read a chart from scratch, understand what every color, line, and candle means. You're going to be able to trade options off what you see. And finally, you're going to have a forecast of where the price is likely going to go the next week and beyond. All right. So I want you to understand, overstand, and understand what you're looking at. When you open this chart, the first thing you will see is the ticker name. OK, when you open up a chart, it's going to be in the top left. I think you can't see it right now because I'm a little zoomed in. So let me zoom out real quick. All right. You still might not be able to see it, but it's in the top left corner. You will see the ticker name, SPY. Ticker name just means this is a abbreviation for you to find that company. So you don't have to type in Standard & Poor's 500. You just type it in SPY. So right next to it, you will see after hours, $677.28, 0%. That means after the regular market closed, SPY last traded at $677.28. It didn't move after hours because it's the weekend or whatnot. That's your most recent price. The chart itself shows price versus time. All right. Overall, that's what you're looking at when you're looking at a chart. It's showing you price versus time, ladies and gentlemen. Price is on the right hand of the side. Right hand of the side. Right hand side. Price is on the right hand side. And time runs left to right across the bottom. If you look at the bottom of the chart, time is going to go from left to right. So if the market opened at 9:30 and it closed at 4:30, time is going to go from left, 9:30 being on the left side, all the way to the right. It'll go to 4:30 or 4 o'clock. You're going to look at time, even if you're looking at a 6-month chart, right? And let's say from January to July, whatever, right? So it's going to show you January all the way up to June. Starting from the left to the right. On the bottom is the time, on the right is the price, all right? So every single vertical candle you see on this chart is a snapshot of the price over a 4-hour period, because we are on a 4-hour chart. So you can see that confirmed at the bottom, range 4 hours. Y'all with me? So we looking at a 4-hour time frame, which is perfect for swing trading and for setting up options trades that last from a few hours to a few days. Some of us like day trading, and some of us are scalpers, and we get into a trade and we are in that trade anywhere from 30 seconds sometimes to 7 minutes. You would get to a 1-minute time frame if you're doing that, a 5-minute time frame if you're doing that, hell, maybe even a 30-minute or a 15-minute time frame if you're doing that. But right now, I want you to pay attention to, look at all of those lines that you see running through the chart, right? The orange line, the blue line, and the purple line. So the orange line represents the 9 EMA. If you have been in class already since the beginning of this session, then you would remember what I told you about the EMAs, the exponential moving averages. So the orange line is the 9 EMA, the blue line is the 20 EMA, the purple line is the 200 EMA. The EMAs, exponential moving averages, and I'll teach you exactly what each one means in a little bit. So you will also see horizontal yellow and orange lines. Those are your key levels. Those orange lines are price alerts. The dotted orange lines that you see is dotted. Those are price alerts. I have those set. I put those there to let me know when the price gets back down to those levels, if they ever get back down to those levels, because I'm paying attention to them levels, because I'm going to get in if the price ever goes back down to those prices. That's what you use price alerts for. All right. So the yellow lines represent key levels of support and resistance. So you got the blue bars on the right-hand side. I put those lines there too. The yellow lines, you can put those there too. SMA and EMA, one just moves faster than the other one. The simple moving average, and then you got the exponential moving average. Exponential moving average moves a little bit faster because it's more weighted towards today's the most recent closing prices. So everything you see on this chart, on this screen, it tells you a story about the price, who's in control, buyers or sellers, when the next big move might be. Also, underneath the candles, you got volume bars, the red and green bars that you see. You got the MACD indicator, which is showing you momentum. And then you got the stochastic RSI indicator. That's for strength and exhaustion. That's what I want to see when some shit is strong or if it's tired. That's what I'm using these two indicators to do. So we're going to break this down. This is the foundation. Every candlestick you see going to have 4 pieces of information to it. Thank you for the roses. See how I don't even know who this is. Beauty out of Brokenness Coach just came in and showed love immediately. That's a high quality person right there. And I appreciate you for coming through my live. Thank you so much. This just tells me it's going up. Yeah, Leo Goddess. But I'm going to get there in a second. Look, every candlestick give you 4 pieces of information. Open is where the price started, that 4-hour session. High will be the highest price that it reached, right? You're going to, every candle's got, not every one of them, but all candles have wicks coming out the top or the bottom. Every time you ever lit a candle, it had a wick on it. That wick is showing you how high the price went or how low the price went. If it's a wick on the bottom, it's showing you that the price went that low, but it came back up and closed where the bottom of the rectangle is at, or the bottom of the candlestick is at. If you see a candle, if you see a wick on the top of the candlestick, it's showing you how high the price went before it came back down where it closed at. So remember that red candlesticks open at the top, close at the bottom. Green candlesticks open at the bottom, close at the top. If the candle is green, that means the price closed higher than it opened. It's bullish. It's going up. Bulls attack your ass in an upward motion. So that's why they call it bullish. So if the candlestick is green, it's bullish. If it's red, it closed lower than it opened and it's bearish. I just want you to know what do these people mean when they say, are you bullish or are you bearish? If you are bullish, you think the price is going up. You're a bull. If you are bearish, you think the price is going down. They call you a bear. Or they say that the price is bearish, or, you know, whatever. So the fat part of the candle is called the body. That's the main battle zone. The thin lines sticking out above or below are called wicks or shadows. They show rejection or extension. So the long upper wick showing you again that the price went up, but the sellers pushed it back down. That's called rejection. You got the long upper wick that's showing you that the price went down. Right? But the buyers bought it back up. That's support. So this is what you want to look for. You want to look for long green bodies with a little wick. That means that the buyers are in control. Or a long red body with a little wick. That means that the sellers are dominating. You want a small body, long wicks, both sides. Indecision is some shit. I mean, it's some shit about to flip. This is a pause before a bigger move. That's the calm before the storm when you see a small body, but long wicks on both sides. You can learn a lot just from looking at the candlesticks. When you start to chain all this shit together, that's called price action reading. You can see momentum, shift and control, and you can see shit flip before it actually flips if you learn how to read the size of the candlestick and using momentum to help you, volume to help you determine what's about to happen. But listen, it can absolutely come down to test the resistance. Yes, it can, Leo. See, Leo, you not no damn rookie. You been sandbagging, acting like you don't know what's going on. You really a pro. Really a professional the way you in here talking. Now, look, we're going to talk about those colored lines that's running through the chart, the EMAs. The EMA stands for exponential moving average. It smooths out the price, but it reacts faster than the simple moving average. Someone asked me what's the difference between SMA and EMA. That's the difference. One of them is going to move faster. The EMA going to move faster than the SMA. So we're looking at look at the orange line that's going through the candlesticks. That is the EMA 9. It's tracking the previous 9 candlesticks. And it's showing you where the price was at during the previous 9 candlesticks. It's giving you an average. Excuse me. It's going to track the short-term movement. This is the heartbeat for the short-term traders. So the price being above the 9 EMA right now is showing you short-term bullishness. So someone came in here and said this only tells me that it's going up. Because the price is trading above the 9 EMA right now. That means on the short term, the price could be going up more. The blue line is the 20 EMA. That's the medium trend, the medium term trend. This is where swing traders pay a lot of attention to because the price pulls back to the 20 EMA a lot and then it bounces. That's often a great place to get in for calls. I'm helping the fuck out of y'all tonight. I hope y'all hit the follow button. I hope y'all inbox me your name and your phone number and the best time to call you because you're interested in having a mentor. Now, the 200 EMA, the purple line, this is the long-term trend line, the big picture. It acts as the market's backbone. If the price is above the 200, the market is strong, it's trending up. If the price is below the 200 EMA, then it's weakness. And then really the trend is overall bearish. Like this shit could really continue to go down from there if it get up under that purple line or if it get up under that 200 EMA. Right now on this chart, all 3 EMAs are lined up bullishly. The 9 is above the 20 and both are above the 200. That's a textbook trade. Some ABC shit. Somebody says she definitely want that candlestick mentor. Hey, yo. I gotta stop reading comments out loud, Brian. Brian, I'm about to put your ass in school suspension. You got me you got me all discombobulated. You got me read that shit out loud, man. Out for real, Leo. But now, all right. So what was we saying? Where was we at before I was so nastily interrupted? Yeah, everything is bullish on here right now. Everything is going up on here right now. So when professionals see that, we looking to buy the dip. We're not trying to short the top. We're not trying to buy puts and shit in the moment. Somebody said you should trade stock options with my team and I. We trade live every day. How about this, Richie? You and your team should trade live with me and my team. We trade live every day. How about that, partner? All right, so now support and resistance is something I want y'all to learn because it's gonna help you out tremendously too. I'm gonna start by talking about support and resistance before I go on with telling you about volume and the other indicators and shit. Look at this chart. Look at the price. Look at the candlesticks. Pay attention to the price action, like the direction of the candlesticks. They started out. Look at the left-hand side of the screen. All right. You see how the price went up from about 664 to about 666. On the left-hand side, you see two little green candlesticks, and it went up a little bit, then it dropped all the way down to 651. That first bottom yellow line that you see, that is support. Why is it called support? Because the price hit that level and it stopped going down, almost as if an imaginary floor is there. Put a W in the chat if you understand that much. Benny Bob, yes, I do show Bitcoin, but that's not the topic right now. I'm helping my people understand support and resistance and how to read a candlestick chart. But yes, I do. We talk about crypto sometimes, you know what I'm saying? But yeah, not a crypto bro anymore. All right, so look, the price came down and hit six. I got a crypto bag. Don't get it twisted. But no, we ain't talking about it though. We ain't talking about it. Until that shit get regulated and they stop allowing people to scam people with it so easily. I'm not just about to be out here being a proud advocate of Bitcoin or crypto. But trust me, dude, I got a bag. I done had a bag since high school. We ain't gonna talk about it though. Yeah, the price came down and hit 651, right? That's support. That is the floor. It's almost like an imaginary floor is there, and somebody took a ball, threw it off the top of a building, and it hit that floor and it bounced up, right? It hit the floor and it bounced up. And when it came up, it hit a certain level and came back down. That certain level is 672. So the price went down to 651, bounced all the way up and hit 672. When it hit 672, notice that it didn't just continue to go up to where it's at now. Before it got to where it's at now, it bounced up and hit 672 2 to 3 times before it came back down. That made that level resistance. So resistance is the ceiling, support is the floor. Right now, we have a new level of resistance, and it's right up there at 677 because the price came up to 677 and stopped. I would mark that level as a level of resistance because now that the price did not continue to go up, I'm looking to see if it's going to break this new level of resistance, or if not, it'll come back down to retest the previous levels of support, which would be 672. So right now, if the price come down to 672, I want to see if it's going to go below it, or if it's going to bounce off of 672 like it's a floor. This is how you use support and resistance. The price will move off of levels of support and resistance, previous levels of support and resistance, and it's constantly making new levels of support and resistance. And you want to mark these levels that the price is coming to and stopping at. If it come down and stop at a certain level, that is a level of support. If it go up and stop at a certain level, that's a level of resistance. It's simple. The floor and the ceiling. Y'all know me. All my followers, y'all know I got to give it to them. Think of price being like a bouncy ball. You throw a bouncy ball in the house, it hit the floor, it hit the ceiling, it hit the floor, it hit the ceiling. If it hit the ceiling and it don't go through the ceiling, where is it going to go? If it hit the ceiling and hit the floor and hit the ceiling and hit the floor and hit the ceiling, where is it going to go next? If it hit the ceiling, where is it going next? If it, come on now, we know the answer to it. It ain't complicated, right? So you treat price action the same way when it's hitting support and resistance. If it doesn't close or if it doesn't break and close below support or resistance, then it's going to go back to the previous level of support and resistance. I hope that makes sense, right? So again, if SPY comes back down to 672 and doesn't go under 672, and it just trades along 672, I know we're gonna break and hit 680 next. We'll pass 670. If it doesn't go below 672, it'll come back up. If it does go back up to 677 and doesn't continue to go up, it'll come back down. How do you know when it will break the support or resistance? Max, you don't know when it will. You're watching for it to. You're paying attention to it. We're not predicting, we are anticipating the move. So when the price gets close to resistance, you want to see if the price is going to go above that level and stay above that level, or if it's going to go below that level and stay below that level. How do you know the values? Rephrase that question, user 5538361883365. How about you change your fucking username? Is Toshi good to invest in? New to invest in? Toxic Cosmico? We ain't talking about crypto right now. What time do you put this lines? Okay. Chris doing work. That don't sound like English. English, but it's like, come on now. Can you proofread that question? How do you know the resistance values? By looking at where the price stopped at. And then what you do is you pull out a toolbox right here. If you look in the bottom right corner of this chart, there's a pencil symbol with a scribbly line attached to it. That symbol is your toolbox. Open that up, and really it might look different depending on what platform you're trading on. But you open up the toolbox and you pull out the trend lines, or actually you pull out a horizontal line and you mark the levels yourself. You put these lines on the chart. Learn how to do that. It'll help you out. It'll help you out. It's basic common knowledge. Just look. That's right, Leo Goddess. Thank you so much. Cause I'll be thinking I'm crazy for a second, but no, I ain't crazy. I ain't crazy. It's they ass. They crazy. I'm just playing though, y'all. Hey, there is no such thing as a dumb question. I may joke if you ask a dumb question. I'm going to joke. I'm letting you know now. I will joke, but we will get it answered. So now I want to teach you about volume and volume profile. Let's decode the blue bars on the right side of this chart. You can barely see them. I apologize, but you can kind of see them. There's blue horizontal bars on the right side of this chart. That's called the volume profile. This shows how much trading has happened at each price level, not by time, but by price interest. The long blue bars means that a lot of trades happen right there. High volume nodes. So the price tends to stall or consolidate at this level. It's a fair value. So the short blue bars means that very few trades happened at this level. It's low volume nodes. So the price moves quickly through these areas because there's less resistance. Notice the large blue shelf between 666 and 670. Really between 666 and 672. You see the very long one? Wait, where? On the right-hand side of this chart, like right next to the numbers, I know you can barely see it, and I apologize. Let me see. I should have made that indicator a different color, so pardon the body, please. But on the right hand of this chart, you can see like navy blue vertical bars. You see them? They're a bit transparent. But that is your volume profile. It's just the extra indicator that I like to use that gives me the volume at a certain level instead of the volume at a certain time. Because the volume bars on the bottom of this chart, that's on top of the time axis, right? The time axis is the bottom chart, y'all. I hate using mathematical terms because a lot of us wasn't paying attention in class when the teacher was teaching us about the XY axis and shit, so... But yeah, if you look at the price axis, you see the navy blue horizontal bars poking out the side of it on the right-hand side. That is the volume profile indicator, and this just shows you the volume at a certain price. So this tells us that institutions did a lot of business at the 671 level. That's also why the price was consolidating at that level right below 672 before it finally broke above it. So if the price ever revisit that range, we expect support. We know that if the price ever come down to 671, it could stop for a minute right there. This is where the big players bought at before. We pay attention to this because we know what happened. We know what to do next. Now, the volume bars below the chart, the vertical red, not the horizontal blue ones, but the vertical red and green ones at the bottom, that represent how much shares traded in that candle's 4-hour period. So green volume bars, meaning it's a lot more buying activity and the buyers are strong. If it's red volume bar, it means that it's selling activity and the sellers are stronger. The bigger the bar on the volume side, the bigger it is going to be of a move. If it's a big green volume bar, right, and it's a red candlestick and it's short, if it's a short candlestick, it's about to go up a lot. Big volume, big move. Little volume, weak move. Just tells you the strength behind the move. If the price breaks out above resistance, if the price breaks above the ceiling on a high green volume, that's confirmation. That means it ain't a fake out. But if it breaks out above resistance, if the price gets above the ceiling and the volume is low, that's a red flag that it might be a fake out or a bull trap and the price is about to come back down. I hope y'all understand that part right there, because I swear that's going to help you out a lot if you can understand volume. Now, the MACD indicator, when you see a breakout candle followed by increasing volume, that's where you know you go in heavy on a call, because strong volume plus a break. But yeah, we're gonna talk about the MACD again. That pimp ass indicator. It sounds like a pimp name, the MACD. Now below the volume bars, you see a smaller panel labeled MACD 12, 26, 9 right there. Right up under you, right where you see the comments at. And then MACD in blue, signal in orange. That's going to be your MACD indicator. It's one of the most powerful momentum tools that you can use out of all the indicators. This is how you read it. The blue line equals the MACD line. This is going to show you short-term momentum. The orange line is the signal line. That's a slower average. And then the histogram, right? That's the red and green shit that's in the middle. Okay, that's the green and pink bars, or green and red bars, sorry. Those are the difference between those two lines. So when the blue line crosses above the orange line, the shit finna go up. When the blue line crosses below the orange line, it's probably about to go down. It's bearish. So when both lines are above the zero line, the trend has strong upside momentum. And whenever it's below it, it has strong downside momentum. On this chart right now, the MACD is above zero and the blue line is on top. So that means that the momentum is currently bullish. The histogram is green. That's confirming the strength, but it's starting to flatten. So that means that the momentum is slowing down. And that often happens right before a small pullback before it goes all the way up again. The purple line is the 200 EMA, Leo Goddess. The purple line is the 200 EMA. What's the vertical bars indicator? That is the volume. I Stark. Leo, don't inbox Chad. I don't know what the hell he talking about. Don't be telling my followers to inbox you, bro. Who is you, Chad? What you on, Chad? You about to get the boot. You're welcome, I Stark. I'm sorry. Where is the zero at? The zero. Okay, so look at the MACD. If you look on the right-hand side of the MACD at the bottom, right, it says 2.33, 0.00, negative 2.33. All right, where my moderators at? Hey, y'all, my moderators, I need y'all to send Chad to the block party. Send him where the food is cold and the drinks is warm. Get that man a hot can of soda and a beanie. Get that man a hot dog, one of the kiddie places. Send him to the kiddie table. He in here messing with people. There we go. Thank you, Stinky Pinky. I appreciate you. Now, where we was at? We talking about the MACD. So on this chart right now, the MACD is above zero. You see the lines and how they above zero? So that's how you know this is pretty much bullish. The blue line is on top. Momentum is bullish. The histogram green, that's confirming it. And it's probably about to go back up from here. Now, the one under that, excuse me, the RSI. Oh, my God, excuse me. I can't drink no more orange juice at night. Must got acid reflux or something. So now, the RSI. The bottom panel is showing you stock RSI. If you see, it says at the very bottom, you see 3, 3, 14, 14. It says stock RSI. This is the stochastic RSI. RSI stands for Relative Strength Index. It's just like the regular RSI. Don't get caught up. Don't be confused. RSI just tells you whether a stock is overbought or oversold. So instead of it being 70 and 30, it's just 80 and 20. So now if you look at the price, if you look at the stock RSI at the bottom, the orange line and the blue line, and then you look at the numbers on the right side of that, how it says 100, 50, 0. What you want to look for when you're using the stochastic RSI, you want to look for, it's a scale between 0 to 100. If the price is above 80, it's overbought. That means it's strong but bullish momentum. If it's below 20, it's oversold. Right now, it reads K 91, 56, and then D 95, 78. That's deep in overbought territory. That doesn't mean it's time to sell. That means that the bulls are fully in control, but we are coming up on a pause zone. So professionals, right? We don't just sell just because the shit overbought. We want to wait for a cross down, right? We want the blue line to cross under the orange. We waiting on the divergence, right? That's where the price makes a higher high while the stock RSI is making a lower low. And then that's going to be your early warning that the pullback is coming. All this shit going to help you understand how to enter the trade, when to enter the trade, when to get out the trade. So that's why I wanted to go over the fundamentals of it, because this is going to make you a better trader. And if you are beginning tonight, then you getting this shit straight out the gate. All right, I'll zoom out a bit. Sorry, Paul. My bad. How do you add golden zones? Well, you don't necessarily add them. They pop up on the chart, Miss Smith. Tao, did I say that right? I know I didn't say that right. Talia Smith, did I say that right? Talia. Sorry if I butchered your name. I apologize. Fibonacci, that's another tool that you can use. The Fibonacci retracement or Fibonacci extension tools. But those are not being shown on the chart right now, Vasquez 2631. But you can use a Fibonacci tool to help you determine when is the good time to get in or out of a trade. But now I'm gonna show you how I would trade this. We're gonna put this all together. So all EMAs are rising. The price is well above the 200 EMA. That's a strong uptrend. The momentum, right? The MACD is bullish. We got the RSI in overbought territory, but the trend is still strong, but it's stretched out. We're going to look at the volume. The breakout happened with good participation in it, right? So that means this is legitimate. It ain't a fake out. This breakout above 672 is not a fake out. And I know that because I'm looking at the indicators to help me confirm it. We got structure right around 672.93. It held the breakout. We have candles that actually closed above the breakout. Okay, so what you want to do, how do you want to trade this? And also, I'm looking at support zones. I'm looking at 672, 666, 651. I know I got backup plans for if it don't continue to go up. I know where it can come down to. I know how far it can come down to. Yes, Lewis, we want to wait for the pullback. 67, no, 670s, not the 60, not 67, 670s Ashton. But now, if you trade in options, you want to wait for the pullback. I want to wait and see if this shit gonna pull back at 673 before I get in the call. I want price to come back, pull back, and retest that level of 672 before I get in the call. You want to wait for confirmation. I'm looking for a hammer candle or an engulfing candle, right? And I'm entering my call to target 680, 685. Now, if I want to hedge this with a put, if I think the price going down from here, if we fail to break above where we at now, why wait for the pullback? To make it a high probability trade, fancy Nancy Pants. You want to wait. You want it to be a high probability trade. You wait for the pullback, because if you get in now thinking that the price is going to go up, Nancy, the price could come back down. And from 677 to 672 is a big ass, like, it'll hit your stop loss if you have one by then. Or you will think that you about to lose money by then. You just don't have a good position. You wait for the pullback for a better position. You get in on the pullback, you get in, and it's going to go straight up from there. You won't have to worry about watching your shit down 30% and then shoot back up from there. Do you buy in the money or out of the money? And what time frame should you look for entries? ITM or OTM, in the money or out of the money? Angels, Scorpios, that varies. So I'm not going to buy in the money all the time. I'm not going to buy out of the money all the time. I'm not going to use the same time frame. It's not a cookie cutter situation. It depends on whether I'm entering into a swing trade or a day trade. It depends on the expiration date. You know what I'm saying? You got to take all of that into account. That's why they say trading futures is a lot easier than trading stock options, because you got so much information to cover when you trade in stock options. Thank you, Stinky Pinky, for answering questions that I miss. Y'all pay attention to what Stinky Pinky say. It's a good source, and they are a moderator, because you should value their insight if they're a moderator in here. What does that mean, in the money? I'm sorry, I'm new to this. It's okay. In the money means that your contract holds real value, that is worth something. It's a good position. This is more expensive because it's worth something. I was taught to buy in the money. Yes. And that is a good thing to be taught. Buying in the money is a good thing to be taught, but they are more expensive. Out of the money is less expensive because it's less likely to happen. But I can tell you how many times I've had big returns from buying out of the money. You can make a shit ton of money. You can make more money than you can in the money out of the money, but it's dangerous. It's risky. But the bigger the risk, the bigger the reward. So it's cool to buy in the money, but sometimes out of the money is necessary too, because you can get more contracts. And it's like a multiplier. What's the rule for going in and going out? Support and resistance, paramedic David McCarty. Support and resistance is the rule for going in and going out. You want to pay attention to support and resistance, and you want to pay attention to volume. All right, so now I done told y'all how to trade this. If we fail them levels and lose 672 with red volume, we could target 666 for a quick profit. Somebody says, explain MACD and volume. You're going to have to watch the replay that's on YouTube, because for me to go over the MACD and the volume when I done went over it 20 times already is crazy. I'm going to run 60 people out of here who've been in here the whole time. I can't do that to them. I'm going to need you to follow me on YouTube and catch the replay tonight. I'm going to upload the whole replay on YouTube. You can go to the link in my bio and subscribe. KO, my boy, thank you for sending the lights, man. Thank you. I might have to pull up on you after I get off. You know what I'm talking about? If not, we'll link later on. But no, I want y'all to understand how to read this shit so you can make the money throughout the week. Swing traders going to ride the 20 EMA up. Day traders going to catch the smaller moves between the levels. Somebody says, so if the blue line goes over 672, does that create a new floor at 672? So if the blue line goes over 672.93, does that create a new floor at 672? Well, the new floor is already there. The floor is already there at 672 because the price broke above it and that's the price that was the previous level of resistance. So now it turns into support that the price has went above it. The blue line is a EMA. So it is only showing you the moving average. It's showing you where the price usually is at that level, right? So what you want to do is the price will come back down to touch that level before it shoots back up. The price likes to bounce off the 20 EMA. That's what that is, the 20 EMA. So we heading into the final week of October. This is what this chart is trying to tell us. The big picture is SPY is bullish. The 9, the 20, and the 200 EMAs are all aligned. Momentum confirms that shit. We ain't got to be confused about it. Like, we know that this is bullish. This shit is going, it's looking like it's finna keep going up. But we are a bit overextended. That means that the price could take a rest for a minute and trade sideways or pull back before it goes up again. We've already recovered from that bad Friday that we had that one day where the price went down like $20, $30. We done already made our way back up, and it ain't even been a full 2 weeks. So that should tell y'all the next time y'all see shit like that, that you could swing trade it about a month out and that's a hell of a dip to buy. Nothing I say in this live stream is broke shit. Like, you can't even be in this live stream on no broke shit, no broke mentality. Broke people get kicked out the live. Because brokenness is a mentality. It ain't got shit to do with your bank account. It ain't got shit to do with how much money you got. If you execute the information in this live stream, you can make your money can make money for you. You can put your money to work. If you missed it, if you catching in just now, if you just coming in now, you really want to subscribe to me on YouTube. The link is in my bio. Also hit the link tree and join everything that you can join, that you want to possibly join to learn and get more of this information and more of this education. So, technical outlook from me. We heading into the final week. I'm looking at this shit being bullish. If SPY stick at this level, if it goes sideways for the rest of this next week coming up between 674 and 678, right? Then break above 680. If that happens with a lot of volume, I'm looking at 685 or 690. We definitely could probably hit 700 before the year over with. With options, what's a fair way to determine the strike price? Support and resistance. Again, David McCarty, my answer to that is support and resistance is a fair way to determine what price do you think it's about to hit. Now, when we in all-time high territory, you don't know how high it can go. You can't control how much you will make, but you can control how much you will lose. You can't control how much money you're going to make, but you can control how much you lose, though. So y'all know how I am about the stop loss. Don't make me give y'all a cram course specifically on that damn stop loss. We already did that 3 times this week. Y'all know I don't play about that. Use the stop loss because a trade should only go in 1 or 4 ways. It should either be a big win. It should either be a really big win, right? Or a very small win, right? Or a break even, which means you didn't make money or you didn't lose money, or a small loss, which means you only lost a little bit of money. A big loss is never a fucking option, bruh. It's never an option, sis. You never want to lose a lot of money, baby. You use a stop loss, you ain't got to do that. You ain't got to never worry about that if you use a stop loss. And if you use it right, you can lose more times than you win and still walk away profitable with more money than you lost. How, coach? How can we lose more than we win but made more than we lost? How, coach? Because of probability. Because if you only lose in 1%, every trade, and you lost 20 trades in a row, but then that 21st trade you took was a 30% return, it wiped out the fucking losses. 1 win wiped out 20 losses. The math has to math. Probability is what you want to use when you are using a stop loss. You do not want to take a 30% loss today, a 40% loss tomorrow, and then a 10% win on fucking, the day after that. Like, come on. You just lost more than you won, and then your stop loss is all over the fucking place. Your risk to reward ratio is all over the fucking place. You really need a fucking mentor. You really need a mentor. You need somebody to help you, guide you, show you how to do this shit. And then after I showed you how to ride a bike, you can go off and do BMX tricks and shit. But it ain't got nothing to do with if you crash and bump your head because you didn't wear a helmet or no knee pads. You need to use a stop loss. Now, if the price, because if the overbought conditions on this right now triggers, some profit taking, because when Monday come and the people that was in calls, they gonna take profit. They gonna take profit. So the price will come back down. Santana, you got $770 puts? I hope you mean $670 puts. I know you don't mean 770. I know you don't. That's a typo. Yeah, so if they start taking profit, if they start pressing sell, right? If it breaks below 672, 666 becomes the key level to hold. That's the buy zone for swing traders if we see a bounce from that area. And if we lose 666 and we see a 4-hour candlestick close below that with strong red volume, then that would open up the door for us to go back down to 650 again. But I don't see that happening. That's not the base case right now. Because that's not the best one. I'm not looking for that to happen. It don't even look like that's about to happen. So for the last week of October, we expect either sideways consolidation or one more bullish leg up to 680 or 690. If anything above 680 hold on a daily close could send SPY towards $700 by the end of the year. This is the SPY. Santana buying puts. So Santana is a bear, ladies and gentlemen. He's bearish because he thinks the price of the stock of this ETF is going down. So if you a new trader, your goal is not to predict. This shit is not about predictability. Remember that. It's about probability. You want to react. You want to wait for the chart to show you confirmation. We looking for trend direction. We looking for volume confirmation, support holding or breaking. Right? We want to see if the price gonna hold, break above support or resistance. We want to see candlestick reverse signals. We looking for all type of clues and signs that help us determine and give us that reassurance that whether we right or not, we don't just get into some shit. If you an options trader, timing is everything. It ain't about timing the market. It's about time in the market. You don't want to buy calls when the RSI is maxed out. You wait for a cool down and then you turn up. That's your edge. Catching momentum right when the shit restart. If you a swing trader, watch that 20 EMA. As long as the price respect that 20 EMA, the bulls are in control. So Santana, if we break below that 20 EMA, then you can get happy and think that we're going to go to 650. He said there's a gap to fill on the downside. I think you might be right about that, Santana. To be honest, SPY didn't give a fuck last week. It kept pumping on low volume. It did. But it was taking the stairs up. It didn't take it took the elevator down and it took the stairs up. So everything on this chart, every candle, every line, every color tells a story. The candles show you who's winning. The EMAs show you the trend direction. The volume shows conviction. The indicators show momentum strength. Support and resistance show opportunity. So when all those line up, that's when you strike. Right now, SPY story is telling us we in a bullish trend. We possibly entering a short consolidation or a small dip before we continue to go up. The momentum is strong. The volume is telling us that this shit is looking good right now too. And then the uptrend structure is clean. So I don't see it going down right away. Any downside to me looks like a pullback before it continues to go up. So if you patient and you trade level to level, this chart gonna give you a roadmap for both day and swing trading. Any chart gonna do that, right? So that right there, that's a full breakdown of what's going on with SPY. You know how to read the chart. You know how to find the trend. You know how to identify support and resistance. You know how to use your indicators and how to plan your trades like a professional. But I'm going to be real with you for a second. The next part is more important than anything I done showed y'all. You can learn how to read every chart in the world. You can flip trades. You can make your money make money for you. You can make a bunch of money on calls and puts. But if you don't have a solid financial foundation, you still building a house on sand. You still building a house on sand. Before I get out of here, I need to talk about something even more important than the charts, the candles, or trading profits, because the truth is none of this shit matter if you don't got a solid financial foundation underneath it. A lot of people watching this shit right now got a savings account, but not an investment account. You got car insurance, you got phone insurance, maybe even renter's insurance, but you don't got life insurance, and that's a problem because one day life gonna happen on your ass, and when it does, you don't want your family or the people you love the most struggling to try to figure out how they gonna pay for a funeral or how to keep the house, how to stay afloat, or why they trying to mourn you gone. You want them to mourn in peace. Funerals are expensive as fuck. The bills don't stop coming just because somebody passed away. It hurts to see families lose someone, then have to turn around and go back to work 2 days later because they can't afford to take time off to grieve. They don't have the ability to mourn in peace. That's what having life insurance is about. It's not about death. It's about protection, peace, and building a fucking legacy. So let me make this clear. If you got kids with no will, I'm here for you. If you own a home, but it's not in a trust, I'm here for you. If you got a business and you haven't protected it legally or with insurance, I'm here for you. If you do have a trust, but no insurance on the trust, you might not realize how powerful that combination can be. And I'm here to help you with that as well. Even if you tired of paying a crazy ass high car insurance bill, I can help you find a way to save money there too. And what you want to do is take that money that we help you save and reinvest it into the market. Okay? So the goal is to make sure you're not just trading and investing, but you actually building real generational stability. You deserve to be in a position where your money is making money for you. You deserve to be in a position where your money is working for you, especially if you're working fucking 8-hour shifts, 12-hour shifts, 40-hour weeks, 80-hour weeks. Your money should be working for you. Let's get you the fuck off the hamster wheel. So if you sitting there thinking, yeah, I've been meaning to get all that in order, don't wait. Right now, click the link in my bio in the link tree and fill out that wealth generating link. Right, fill out that form. If not, inbox me your name, your number, and the best time to call you so we can get you set up properly. I need you to connect with me and my team so we can get you set up properly. Whether it's life insurance, building a trust, writing your will, getting your investment accounts working for you, I got you covered. You don't have to figure this out alone. Let's make sure your family's secure, your future's protected, and your foundation is solid. Because it's not just about making money. It's about keeping it, protecting it, and passing it down. That's real wealth. That is real freedom. That's real financial freedom. That's what I want for every single one of y'all watching this tonight. So how many people want to know what their financial independent number is? That's how much money you need to retire and never have to work again a day in your life. Put it up. Let me know right now. What is your financial independent number in the chat? Tell me how much money you need to never have to work again. It is your number that you need to hit to retire. See, retirement doesn't have shit to do with age. Have y'all thought about this number? Let's think about it right now. In the chat, tell me how much do you need to never have to work again a day in your life? Ladies and gentlemen, you need to make sure that you have a solid financial foundation before you try to trade. That way you can trade comfortably knowing that you have this taken care of. Your money can make money on the side for you in an investment account while you trade. You can trade comfortably knowing that your money is already working for you. It's another level when you can trade comfortable, ladies and gentlemen. Fancy Nancy Pants 2.3 million is so obtainable. Inbox me so we can build a plan to get you there ASAP. Difficult because I must know the end of the live, says Nimra. I'm not sure what that means, but yeah, hit the inbox, y'all. Follow me. If you are new here, follow me. If you are interested in building a solid financial foundation before you learn how to trade, or if you're interested in learning how to trade, I am offering a package where I will teach you for free. If you come to me and a team and you allow us to build you a solid financial foundation, I will show you how to trade for free because I know that you built this foundation. You came to me to help you build it, and I know that you're serious. I know that you're serious. If you already have some of these financial foundations in place, you still can come to me and the team and we can go over it to make sure that you got the best shit going for you. We need to make sure that your money is working for you in the best way that it can. If you are unemployed or you're just looking for an extra source of income, I'm hiring, right? Are you interested in being a financial advisor? Maybe you want your life license or your mortgage license or your financial advising license. I can help you get that. The company I partner with, they will pay for your schooling, pay for you to get this information, this financial literacy education, and you can get paid to help people from the comfort of your home or on the go. You can see as much as you would like to see if you're a hard worker and you got good work ethic. I just need you to be able to pass a background check, and you can make anywhere from 5 to 10K a month, 20K to 50K a month, depending on your work ethic, depending on how much you are coachable. So if you are interested in that, inbox me your name, your number, and the best time to call you. Please follow instructions, ladies and gentlemen. Your name, your number, and the best time to call you, okay? Give me your time zone too. I need your email address as well. Go ahead and do that right now. Inbox me your name, your number, the best time to call you, your email address, what time zone you in, so I can get you on the schedule and we can go ahead and build you this solid financial foundation so that you can trade comfortably knowing that you took care of this. If you have children and you love them, contact me so we can get you a will. So that when you pass away or something happened to you, the state don't decide who gets what or what happens to your children. If you got loved ones that you love and care about, life insurance is the ultimate I love you from beyond. Everybody that you love getting a $500,000 check on that policy is going to be real love. You leaving this earth and leaving them with nothing is going to hurt. Husbands, don't leave your wives and your kids with nothing. That's fucked up. Contact me. Let's get you some insurance. All y'all got a savings account. That shit ain't growing no money for you. You got a savings. You got money in a savings account right now. It is growing interest at such a fucking low rate that your money got cobwebs growing on it. That shit need to be growing and making money for you. Why don't you want $100 to turn into 1,000? Please tell me. You should want that. No, it's not a game, Mr. 88. It's not a game. You say that, but if I don't see your name and phone number and the best time to call you when I leave this live, then I can't take you serious. You serious as a heart attack? Inbox me your name, your number, your email address, and the best time to call you. And I got you. We're going to get it taken care of tomorrow on a Sunday. It's not a game. Because if you want your money to work for you, you want your money to be employed, you have to deploy it. It take money to make money, right? Y'all know that saying. Y'all know damn well it take money to make money. Every single thing you ever heard of on how to make money, it takes something to make it. No doubt, KO. You see, we cooking. So I'm going to let y'all go. It's 3:44 a.m. Sunday, October 26th. We're going to make today twice as good as yesterday and half as good as tomorrow. I hope I got inbox full of serious people in I'm serious. When I get off this live, y'all better have sent me your name, your number. Don't forget the email address. Don't forget the best time to call you. I'm in Eastern Standard Time, so I need to know the best time to call you. I don't know what time zone you on, so you got to tell me where you at. All right, I got you, 88. And so I hope y'all enjoyed the show. We went over a lot. We went over how to use a stock screener. We went over how to read a candlestick chart. And we went over how to build a solid financial foundation. And I invited every last one of y'all to inbox me so that I can help you out if you need a mentor. If you would like to continue to learn how to trade outside of tonight's live, if you enjoyed the live, please reach out to me. Y'all have a good night or a good morning.